Here we're going to talk about actually doing the Pony Rides to Go project. You should have a copy of the narrative of the transactions, and that packet has a header sheet that looks like this that you see on the screen now. You should also have the payroll registers, and these come in Excel files, and along the bottom tabs say the dates of those different payroll registers. You also have an Excel file that is called a check register. This particular project instructions is for April of 2015, but your project may be different from that, but the how you do it is still the same. So let's take a look at the instructions, the narrative. Here you're told that you are now going to be the bookkeeper for a small company that does pony rides for children's birthdays and also allows for trail rides to be given from the farm itself. You're told what records that you're going to need, starting with the general journal and what page that general journal needs to start with. Again, your instructions may have a different starting page other than this page 116 that you see here, but you will need to follow your instructions. A general ledger you will have filled out. I will give you, if you're in a physical class, I will give you blank general ledgers to use. Otherwise, you can make your own on paper, or you can use electronic general ledgers. Although if you are in a physical class, all your stuff needs to be actually written in on the ledgers by hand. If you are in an online class, your journal and your ledgers will both be electronic, and you will type your stuff into those. The check register is given to you as an Excel file, and I would suggest that you I have the first few lines filled out of your check register, and you would just continue on where that leaves off. I give you the payroll registers for the 4 dates, and you can use that information to make journal entries, and those are Excel files. And petty cash register, you're given a blank petty cash register to include those instructions on, and that is a separate YouTube on the petty cash. Worksheet is given to you in shared files, as are these other files. They're all in shared files. A blank worksheet is there that you can use, or you can make your own worksheet. And the financial statements will be on either electronic accounting paper or your own accounting paper. I'm going to go ahead and let you read some of these other things. But basically, if someone books a pony party for their children, we haul ponies out there and we do the pony party. And the parents discuss with us what it is they want, and Camille, the owner of the company, decides a price. At the time, then the people who are giving the party, who are booking the party, they will also discuss with Camille if they want to set up a later payment date. As soon as we actually do the party, the money is due. And so if they don't have something already set up with Camille, they will need to give us the cash right then. And if they do have something set up with Camille, then she'll give them 30 days to pay, and they would go into accounts receivable. The bottom of the page, it talks about payroll. For this particular project, the employees make $12 an hour, but that's already calculated on the payroll register for you. you need to do the journal entries for payroll. Okay, the top of the next page talks about some of the things that you'll be doing later after you have the transactions journalized and posted. Here are some tips about getting started and the end of the month. Here's Dr. Dooley's honesty policy, which is I'm very stringent about. Working together is fine. Copying from each other is not fine. And I generally catch at least a couple people every semester. So please do not be one of them. Here's your chart of accounts. These are the accounts that you need to use for the project. And notice that all the assets start with a 1, and the liabilities with a 2, and the owner's equity with a 3, revenues with a 4, and expenses with a 5. You may not use any other accounts other than these, and you must use these without altering them in any way. This shows you the ending balances from last month. So in this case, we're doing April transactions, so this is ending balances from the end of March. So that becomes our beginning balances for April. You'll need these numbers when you go to do your ledgers. You're going to have to set up the beginning balances in your ledgers, and we'll talk more about that on a different YouTube. So here is our first transaction, and you need to take a look at each transaction. Who is the buyer? Who is the seller? Does this involve cash, or does it involve somebody owing somebody in the future, etc.? So here, the seller is Griff's Feed Store, and we are the buyer. What are we receiving? We're receiving feed for $420. And what are we giving up? We're giving up the fact that these terms say net 30. That means we owe out to Griff's Feed Store, a vendor, and we're going to owe this $420 30 days from now. And so here we're receiving feed and giving up the fact that we owe out to a vendor. So when we owe out to a vendor, we're going to credit accounts payable. Now, what do we do when we are receiving feed? So we're going to take a look at our chart of accounts, and we see there's accounts payable. What do we do for feed? Now, when you buy supplies, you purchase the supplies, you own the supplies, and you put them in an asset called supplies. And we have up in the supply section an asset called office supplies and one called barn supplies. However, there's not one called feed supplies. Generally, if you buy some kind of supply that you're going to use right away, you generally skip putting it in the asset. Office supplies, it's going to take us months to use those office supplies. So we put them in the asset called office supplies, and then as we use them each month, we say, well, how many, at the end of the month, we're going to say how many office supplies have we used, and that part that we use will be transferred out of the asset and into an expense account called office supplies expense. But with feed, we use it right away. It's not like it's going to sit there on a shelf. Horses' digestive tracts are such that they cannot deal with even a little bit of mold. So we buy the feed and we feed it fairly right away. We don't let it sit around and possibly get moldy. And so because of that, we're not going to put it into an asset and then every month decide how much feed did we use and move it to the expense. We're going to go straight to the expense because we're going to use all of the feed right away. And so notice that account 504 is our feed expense account. So on this first transaction then, we are receiving feed, so we're going to debit feed expense. And that's an expense, and we have an increase in it. And so yeah, we will be debiting that. We owe out to vendor. We owe out more than we did, and so that's an increase to a liability, and so that's a credit. The next transaction, here we are the seller, and the buyer is Wendy Lane. And she bought from us a pony party for $380 on April 2nd. And notice also that the word paid is stamped onto this invoice, meaning that once we got done with the party and she owed us the money, and we presented her with the sales invoice for the party, then she gave us a check right away. And so we stamped her in this invoice as being paid. So we're receiving cash of $380, and we gave up sold services. Okay? So for cash, of course, I'm going to have an increase in asset. That's a debit to cash. For the sold services, I'm going to go back here to my revenue accounts. I have two revenue accounts, sales-pony parties and sales-trail rides. This is a pony party, so I'm going to use sales-pony parties. And that's like any other revenue. I'm going to credit sales-pony parties. The hauling costs, a little picture of the horse trailer is underneath the sales invoice, and the hauling costs are told to you for that particular job. When we load the ponies up to take them to the pony party, we stop at the gas station and we use the credit card to put in any gas for hauling for that particular job. And so this is how much $70 was put onto this credit card at the gas station. Okay, so once again, we're using all the gas right now, so we're not putting this in gas supplies and then figuring out how much we use each month. I'm going to use that $70 today, hauling these ponies back and forth to this particular job. And so we're going to go straight to an expense, and we find hauling expense 503. So we're going to debit hauling expense. That's what we received, and we gave up the fact that we owe out to a credit card company. And here in the liability section is credit cards payable. And so I'm going to credit that. Each time you have a sale, you will always have this little trailer with the hauling costs right after it. The next transaction shows you where we got a small business loan from the Small Business Administration. So we received $5,000, but because it's a loan, that means we're going to have to pay it back. Okay, and so here we're receiving cash, we'll debit cash. We owe out to the Small Business Administration, which is like a bank, and so here is note payable bank, and that will be the liability account that we increase or credit for this particular transaction. On the following page, we have another sales invoice. This time we're selling a pony party to Even Though on April 4th. Well, this time, notice there's no paid stamp on here. So that means Even Though did not give us the cash when we were done with the job. Notice down here it says pony party balance due May 4th. So he must have already talked to Camille, the owner, and it was figured out that he is going to be one of the ones that gets to pay 30 days from now. So he'll owe us $425. So when we go to our chart of accounts, when the customer owes us, that's accounts receivable, and we're going to debit that. And we gave up sold services, and we look down in our revenue accounts and we have sales-pony parties, and that's what we'll credit. Then our hauling costs, which we've already discussed, is right after that. Here we have a sales ticket, and these are given out whenever people come to the farm and do a trail ride. We give them a sales ticket as opposed to a sales invoice, because they're not going to pay after we do the job, and nor can they ever owe us on a trail ride. They come, they pay up front, we give them a sales ticket, and then we do, then we go ahead and give them the trail ride. And so here we had a group called Under the Direction of Sunny Day, and they did, their group cost $180. And we always receive the cash. There's never a balance due. And so we received cash of $180. And we gave up the fact that we sold our trail ride services. So we're going to debit cash, and sold services means it's a revenue. I go down to my revenue accounts, which start with a 4. And there's sales-pony parties and sales-trail rides. And so we'll be crediting sales-trail rides in this case. Finally, we have the wages for the week of April 6th, and that is a separate YouTube, so you can take a look at that. I do want to touch base on this petty cash voucher. There's a couple of these in the project. When you get to the petty cash voucher, recall that you are never to debit or credit petty cash. So this information is going to go on your petty cash register, but it will not be put into your journal entries. Only after you replenish petty cash will you journalize anything regarding the petty cash. And you'll use your numbers from your petty cash register. Now let's go back. In the next set of instructions, we'll go back and discuss what you need to do with the check register, and we'll have a separate set of instructions on dealing with the payroll register and those journal entries.